Let's just start with the overall picture. Lots of records here. How do you feel about that as a wealth manager and clients who want to make sure they're catching some of that, they're capturing that wave, but they're not going to get clunked by it?
I would describe our conversations with clients today. The advice is the same, right? It's been one around staying invested for the long term. It's been one around diversification. I think what's different now, though, is the volatility, the uncertainty risk, right? So if you're looking at investors today and we're telling them to be diversified, when you unpack that today, we were just talking about trillion-dollar firms. You look at the top 10 names in the S&P, they represent almost 40% of the value, the S&P. How do you unpack, and they're largely tech and AI kind of driven names. How do you unpack that diversification? Then you go to uncertainty and policy uncertainty, it's all-time high. And then you even go to alternatives, which is trying to enter the market and then trying to understand what's the right liquidity profile. So I think today advice is at a premium, and your ability to kind of really unpack how you truly diversify your portfolio is a pretty important factor.
People pay you for advice, but I'm getting it for free for my viewers right now. So what is that advice? Because when you say that people have to really diversify, a lot of investors right now think, oh, wow, I'm diversified because I have memory chips, I have regular GPU chip companies, and I've got some of the hyperscalers. That's not entirely diversifying.
No, and again, I think the old way was, 70-30 portfolio. You can invest in passive index funds. You can be in ETFs that kind of give you a broad diversification. I think today now it's like, how do you unpack that? Like, what are your solutions, right? The idea of like, what stock should I be invested in, large cap, mid cap? It's really a conversation around, let's talk about, is principal protection important for you? Income yields. What is your time horizon? And then when you do that is, what are the solutions that we can offer? And also the technology behind that. Like, how do we deliver that solution?
Well, let's say I'm a 5 to 10 year investor and I've got a decent time horizon because we're all living hopefully till 90.
Yeah.
Hopefully. More than that, at least in Warren Buffett's case. But tell me, then what do you do? Have you moved to a wider cash allocation because we are at such extreme records?
No. We, like I said, we are still kind of, we more advise around less cash, be more invested in the markets. And obviously that's paid off. Even this current market, we see the S&P going past 8,000 this year. Yet it's not a linear function, right? And there's going to be a lot of volatility there. So again, it's looking at your outcomes. And then also what we do from an SMA perspective, how we bring in technology to be more customized for you. So you're not just in a target date fund. You're not just in these kind of basic products. How do we tailor things to our clients so that they have the ability of the flexibility of kind of accessing more, but also changing their minds?
Let's talk about a very short-term horizon event that is about to happen, and that is SpaceX, one of 2 or 3 either trillion-dollar or near trillion-dollar valuation IPOs that are on the way. Now, let's just say you've got clients who don't have any interest in buying the SpaceX IPO. That said, you believe that there will still be, let's just call them aftershocks that affect people who aren't even in the stock. What does that look like, those aftershocks, and what do people need to be ready for when SpaceX hits the market?
It's a good question, because the short answer is, this is new territory. We really don't know. You would expect there to be somewhat of a shock in terms of how's the liquidity going to be handled in the system? There's a lot of factors, but that whole thing, it is an unknown. So again, you step right back into what are the fundamentals? What are you exposed to? What would these different things do to your portfolio today versus your time horizon?
Well, let me push you here. Post-IPO, there are people who will wait till the stock settles a bit. They will jump in to buy that stock. But to do so, many of them will sell other stocks. So you're saying that the volatility will definitely increase, or at least people should be prepared to see that as liquidity goes out of some tech stocks and into the SpaceXs, and eventually, if Anthropic goes public or OpenAI, those 2 names as well.
Yeah, and again, it's disruption, it's market noise, and as we tell our clients, you try to remove emotion, you try to remove that piece that's just largely noise, and say these things tend to correct over time. So trying to play these kind of short-term shocks or trying to play these kind of short-term moves is not what we advise our clients.
We haven't even talked about the Fed, because the Fed is not really front and center at the moment as these markets continue to charge ahead. But everybody knows, they can see the Fed funds futures that indicate no rate cut, at least this year. Kevin Warsh is the new Fed chair. What do you expect him to do? What do you think he should do?
Yeah, it's a little bit of back to the future, right? I think we were in an environment where the view around inflation was a little bit low, toned down. I think the market not that long ago was pricing 60 basis points of cuts. You look at it today, the market's probably pricing in 25 basis points of rate hikes, right? And again, this viewpoint of, is there a new Fed chair that's going to be very, cutting rates? I think the market right now is expecting at the very least to not be cutting rates, but even looking at the fear of what's happening with inflation.
Possibly a hike. In fact, tomorrow, I want to just flag all of our viewers because tomorrow's final hour of trade is really important. We are getting tomorrow morning the Fed's favorite inflation gauge for May. That would be the PCE, personal consumption expenditure, and that will be telling. We know that inflation, at least the most recent print for CPI, looked very high. It was above 3.5%.
Now, if you look at the duality here, right, on one end, you've got very constructive markets, right, in terms of earnings, I believe, year over year are up almost 30%. There's strong fundamentals. Yet you've got these other policy mistakes. Policy uncertainty is at an all-time high. Inflation now is kind of the key indicator. That's what everyone's looking at and saying, okay, what will the Fed do? Are we back into another zone of potential policy mistakes? But I believe the market's looking at this correctly in terms of rates kind of staying where they are or largely kind of having to climb up to be careful with a continuing kind of hot economy.
All right. I'm just keeping my eyes riveted to this. The Russell has gone negative slightly. Any gain for the Russell would be a record, but we still have records for the Dow, the S&P, and the NASDAQ. Jose, thanks. Good to see you again.
Yeah, good to see you.